that's come back. So I think I know that they're all ETF case by case, but David, there's a
forecasting a $400 trillion
Hey guys, what's going on? Merry Christmas, Happy New Year. I am actually filling in for Brandon today, who is not feeling that well. Hopefully he does not have COVID-19. I talked to him this morning. The guy's coughing and still putting all these good, crazy quality slides for you on the research. So give a shout out to Brandon in the comments. Wish him a faster recovery from his current state. Guys, with that said, I'm going to bring some light. Guys, it's some insane, crazy stuff developing in various sectors. In the particular sector we're going to take a close look at today is going to be the travel sector. The question is the insane breakout in the travel sector going to continue in relation to March lows of this year? Or are we actually going to stage a setup for another crazy crash here? Now, we've accurately predicted the crash in the travel sector. We actually posted the video on this channel in last December and multiple videos in January of last year predicting this crazy, crazy crash. And we particularly outlined BKNG as one of our top trades when it was trading about $2,000. Now, you know what happened to it in March of 2020, BKNG dropped all the way to $1,100. So nice trade for those that paid attention and had the patience to actually stick with the trade. Now, the question is, in the first quarter of 2021, how do you want to trade this information about to present you in this video? And I'm going to give you a very short answer at the very end of the video, guys. So let's take a closer look at the travel sector and what's going on. So needless to say, okay, the sales numbers are down all across the board. But what the hell is actually going on is absolutely insane. So we're going to take a look at a few sample stocks from each travel sector right here, guys. We're going to take a look at hotels, cruises, airlines. And so if we take a look at the numbers, so the sales numbers, the revenue numbers, all combined across these sectors are down by as much as 50%, depending specifically which sector we take a look at. But despite of the revenue numbers being down by so much, okay, everybody's highly optimistic. Of course, there's this stimulus package that everybody awaits, and partially the stock prices are highly inflated due to that. But should they be trading at these current levels, or what levels should they be trading at? That's the answer. We're going to try to open up your eyes in this video with multiple charts. Now, 2020 US forecast, okay, now people are coming out and saying, well, now maybe this recovery is not going to be as fast as we assumed, especially even if we get the vaccine to everybody. Okay, is everybody even going to take it? Is people going to care to travel and so on? So let's forget about all the fundamental things that you probably heard a lot of people talk over on TV, and let's focus on the charts and what the charts are actually pointing towards. So recovery time frame, that is to say, could be largely overstated. And so what we are pointing to, the only thing we're going to mention here as far as the fundamentals is the fact that the expectations are running extra high. And one thing you should know as a trader, whether you're brand new or seasoned veteran trader, guys, when expectations are running high and expectations are not met, when expectations don't come through, or even if the numbers are slightly off, that is a setup when things do have a tendency to have sharp sell-offs or corrections. So without further ado, we're going to take a look at airlines. We're going to take a closer look at AL, UL, and take a look at Caribbean cruise, bunch of cruise lines here, and the most phenomenal trades that we're expecting to come through in the first quarter of 2021 would be BKNG, Expedia, and you're going to see exactly why. Now let's take a look at UAL. Earnings history and chart right here, guys. From consistently making about $2 to $3 per share, right? The stock basically completely unwinds and loses up to $10 a share. Now that's a huge move, guys. Percentage-wise, that is a 600% reversal in earnings per share. Definitely not in the direction where it needs to go. So despite of that, okay, United Airlines, guys, have been able to stage a substantial rocket move higher here, all the way from 17s back to the 50s level recently, and currently trading just under $50, guys. This is an insane move. I mean, this is more than double. I mean, this is double plus since March lows, while the company consistently makes this insane losses. Now, of course, they're going to argue that the trend and the direction of the earnings per share is going to be substantial improvement, and clearly it's not going to take much to improve based off the numbers that the companies have had last year. And of course, the bulls could argue, well, hold on, but it's half of the price that it used to be from December 2019, so 12 months ago. I mean, it was at $88. Now it's like in the 40s, under 50. I mean, it's half of what it used to be, so it's still got room to run. But when you put it from the perspectives of the earnings per share and all the obligations, all the loans, all the leverage that these guys have been taking out just to keep running these airlines, guys, this is absolutely insane. So in relation, when you look at other numbers, okay, it doesn't make sense that the stock even trades at these current levels between $40 and $50 a share. Now, UAL chart January 2020, guys, $74. So we're not that far off. I mean, a 30% drop in the stock price. When you take a look at the 600% decrease in earnings per share, these numbers simply don't make any freaking sense here. So, and of course, chart of UL hitting the lows in March 2020, so about $16, $17 right here, 17 and some change compared to the current price. Now, this one was a snapshot from December 23rd. We're at $44. I think we're slightly higher today. Now, RCL, guys, let's take a look at the cruise. So basically the summary for the airlines, we don't have to go through each and every stock, but since the lows, the airlines have doubled or close to tripled in certain instances. Yes, they're still trading off the pre-COVID levels by as much as half. But when you take a look at the internal numbers and the amount of debt that these companies have taken, this current pricing makes absolutely no sense. And of course, nothing makes sense in this current market right now, but let me show you some further slides that are going to be absolutely shocking. So let's take a look at the RCL, Caribbean Cruise. Now, the reason this situation is even worse than airlines, guys, a lot of people are focused on the stimulus bill and what these travel sector is going to get. But these companies right here, these cruise companies, guys, they're not going to get anything. Okay, number one, they're not U.S.-based companies. Most of these companies are foreign-based companies. Some of them are based in the Caribbean. They're not in a part of European Union. Okay, so these cruise companies, they're not fixing to get any part of these travel stimulus bill. Now, this is how bad the situation is with the cruises because from making $4, they're now down to losing $5 a share, and the trajectory is not improving. Now, why the hell would it improve? Okay, they cannot even. Now, why the hell would it be improving? In most of the countries, nobody can even take a cruise to go anywhere. So these guys are basically stuck with their regular liabilities, not able to make any type of revenue. And the only way they're being sustained right now is by taking out loans. So more loans could get you to possibly survive, but to expect a drastic increase in earnings per share or revenues, guys, at this point, this trajectory is not going to be a sharp move higher. However, it appears that all the expectations are already baked in. If we take a look at the price It's shocking that this thing is up from $19, $20 all the way back to recently almost 90, and currently trading in the 70s. So guys, this is 4 times higher since the lows and almost back to the pre-COVID levels, guys. This is absolutely insane right here. So this is RCL chart December 2019. We're at about 132 bucks. And RCL chart January 2020, we're at about $1.15. Actually, this was one of the trades we recorded and posted on the channel last year, guys. Short in RCL in the 120s. After that, shortly after that, it hit a level of about 90. So quick move within the scope of the time frame where the trade is placed. And I think we're going to visualize some similar opportunities here in the first quarter of 2021 when people realize that expectations are so high and bullish in relation to what is actually happening. It wouldn't be a shocker to me if RCL by the end of 2021 would actually file for a bankruptcy. So when you're considering some of the greatest shorting opportunities, okay, despite of the stimulus bill, these companies are not going to get bailed out. And when I mean these companies, I'm talking about the cruises, the Caribbean cruise, the Norwegian cruise, all of these cruise companies. They're on the verge of a bankruptcy, and it is absolutely shocking to me that nobody is talking about these things. So recently trading almost 90 bucks as if it's making any sales. The company is not making any sales right now. So RCL chart March 2020 off the lows, right, under 20 bucks, going 4x since then. And currently in December 2020, we're in the 70s. So off of the highs, close to the 90s, but still about 3.5 times from where we were in March. Now, NCLH, Norwegian cruise, guys, same situation, right? From consistently making $2 per share, the company goes to -3, and the trajectory of the rise in earnings per share is just, it's flat. It's flat, and their pricing this thing is as if it's going to go back to making money like, next quarter. That's not going to happen. I mean, this company would be lucky to go back to break even like 3 years from now if it survives the bankruptcy, okay? And so these pricing, they're so shockingly out of reality in some of these things. I mean, all of these are candidates for a bankruptcy, again, because they're not going to get bailed out. So here's what we've got. Stock triple since the lows, right? I mean, here we were, March, April, May lows, and now we're 28 bucks recently. I mean, again, the bulls are going to argue, yeah, but we're still half of where we were. Yeah, but look, now the company's it's dog shit, okay? I mean, it's not making money. It's trying to borrow just to sustain. And it's just, there's no bull case here, period. These companies are not going to get bailed out. So signs of the top clear. If you take a closer look at some of these charts, there were signs of the top that we predicted last year in December 2019 before the crash, and we're seeing similar signs of the top developing right now, even though within the context of the time frame for this video, we're analyzing basically going back 12 months, okay, but we're in the stocks 2, 3, 4 times off the lows in March, but we're setting a temporary top, which 12 months from now could prove to be the top that would be similar to the one set in January of 2020. Now, so the question is, the bulls are going to argue, okay, well, are we going to rock it back to the 53 level? So the bulls are going to argue that, look, there's still a lot of meat on the bone on these travel stocks to go higher, and clearly they're arguing that the move towards January 2020, which was about 53 bucks, will still be off the high the prior month of like 59 bucks last year. Okay, I mean, it still makes sense that the stock could double based on the vaccine and the high expectation, and basically we just don't see it happening at all. And CLH chart March 2020 off the lows, under 8 bucks, guys, currently trading at 20s. I mean, this stock is 3 times off the low, while there is really no improvement in revenue or earnings per share or any positive outlook on the stimulus side for this particular sector of the travel industry. So 3 times since the low, still half of the pre-COVID pricing of the stock last year. So CCL, Carnival, probably the most famous of all, but look, same. I mean, the same trajectories from making money between $1, $2 a share to basically losing $3.30, and it's flat. The trajectory is flat. The company's not making any damn money. Why the trajectory should be moving sharply higher? It's absolutely insane. So CCL earnings, basically pre-COVID right here, sharp drop, hitting the lows in March, April right here of under $8, and recently we're at 24, just not so long ago, trading in the 21, 22 range today on December the 31st, 2020. So signs of the top, as we pointed out in December 2019, followed by a sharp drop, and current conditions look similar to that. So still way under the pre-COVID level of about $43-50 per share, but definitely substantially off the lows from the March lows. So more than half of the pre-COVID highs. That would be the bull case that has still got room to run, but based on the other numbers, it just doesn't make any freaking sense. So here is, guys, the most interesting part of the video. Here is where things are absolutely out there. So BKNG earnings history, okay, it's going from making $23 a share to losing $12 a share, okay? And if you take a look at the chart, at the same time, the stock officially today, December 31st, trades at all-time highs. So it's got 300% reversal in the earnings to the negative. It's got earnings are slashed as far as the revenue numbers to the negative, yet the stock trades at all-time highs. This is how insane this market is. Now, I mean, you know, BKNG, Priceline, I mean, it doesn't matter which website you go. If you look at the booking site in Europe here, or if you look at, Priceline site, I mean, we know what these guys are selling, right? I mean, they're selling airfares, they're selling hotels, they're selling vacation packages. So if cruise lines are not really operating, if hotel sales are down, if airline sales are down, then how the hell can BKNG sales be up? Or how the hell can this stock remotely possible with such decreased revenue numbers and such a slasher on the EPS be trading at all-time highs? So this is what we call a classic divergence that most of the market participants don't notice. Okay, and this divergence is so huge that it will create one of the greatest trading opportunities in the first quarter of 2021. Now the question is, do you know how to trade this? And because if you don't know how to trade this, specifically when to get in this trade, okay, you don't necessarily want to just go ahead and short this today. Okay, you want to capture the right moment to short, especially if you're a day trader, swing trader, you're dealing with weekly options, which what we specialize doing with 13 Markets Move formula, guys. You want to know exactly what strike to pick. You want to know exactly when to pull the trigger on this trade in order to profit. But this could be the greatest options trading opportunities of 2021 right here. BKNG looks like the mother of all divergences right here. So take a look at this chart, right? So December 2019, the stock was trading at 2,050. This was actually the level where we suggested shorting the hell out of BKNG. Now, it's $170 higher, okay, than it was trading a year ago, okay? Now, BKNG chart January 2020, okay, that's when the drop-off began. It's trading $400 higher than in January of 2020. BKNG chart March 2020 hits the low of 1100. Actually, this is when we were bullish on the stock. If you review some of the videos we've posted on the channel, when everybody was still highly bearish, we suggested, hey, this stock was going to move temporarily to $1,500, and so we were able to capture these nice moves. So sometimes it's not just the size of the move that's meaningful, but the time frame within which that move is created, because that's ultimately how you make a ton of money trading weekly options. If the size of the move is huge within a short amount of time, that's when your options appreciate drastically. So we were able to capture that in both directions on BKNG last year, and I think we're going to nail this upcoming opportunity, guys. and you definitely don't want to miss out on this trade. So click the link below, schedule a 20-minute coaching call with a senior trader here, and get these questions answered about your strikes, how to trade this going into 2021. So BKNG chart, December 2020, guys. Look, this was just a few days ago. Brandon was preparing the slides, December 23rd, 24th. So today the stock is at 2,200. I got a typo here. It's supposed to say 22.24. So last time I glanced at my trading screen, it was at $2,200, 24 bucks, guys. That is absolutely insane. So it is, in the last few days, it actually moves higher to close out the year at all-time highs. Now, the story with Expedia is no different, guys. You got same identical story with Expedia. Now, Expedia historically is not as strong of a performer as BKNG, but nonetheless, if you're working with a smaller account, sometimes it's difficult to capture the right pricing on BKNG options. Now, it all depends on the market conditions, and again, it all has to do with picking the right strikes and expirations and when you actually initiate the trade. With Expedia, it's a little bit easy, especially if you're working with a smaller account. So this is really a parallel type trade, a correlation type trade. You can use on either one of these. Expedia is going to work a little bit better for smaller accounts. So basically, the stock goes from making almost $4 a share to losing about $4.20 a share. Nonetheless, look at what's going on here. The stock is trading close to all-time highs. All-time highs. Yeah, it's making less. The revenues are less, but the price is close to all-time highs. Literally, with the same level we're trading pre-COVID, with all these fundamentals severely damaged. But nonetheless, it goes to the moon. So Expedia chart, December 2019. Look, we're at 107. So today, Expedia trades at 133. So we're about 15% higher today than we were before. So the stock is priced higher now than it was before COVID-19, and it's making less money, way less money, and its sales are entirely down. I mean, we're just comparing apples and oranges here when we're talking about the scale of derogatory development in the fundamentals of these companies. And so take a look at March 2020. This was the low at 42 bucks. I mean, we're at 133 right now, guys. You don't have to be a rocket scientist to figure out, roughly it's 4 times. The stock is up 4 times from the lows, and there are tons of analysts on Wall Street making the case that this shit is going to go way higher. Now, we clearly, based off my tone in this video, clearly don't think that, because the divergences on the charts has helped us nail some of the most phenomenal trades. I mean, some of them have been recorded to show you guys on the channel how we take 4K to 60K, 4K to 100K, and so on. So yeah, if you're new to the channel, you haven't watched those videos, all of them are based on the divergences that we teach in our charts and divergences course. So basically the situation with Expedia is it's 15% higher now than during the pre-COVID level. Okay, even though the stuff it sells, okay, fundamentally is tied to airlines, hotels, vacation rentals, and so on. Okay, yet this company, despite of airlines and hotels and everything else doing poorly, yet this company all of a sudden is worth 15% more now with all derogatory fundamental developments than it was before. So, greatest divergence, guys. This is absolutely freaking crazy here. So let's take a look at a couple of hotels. So HLT earnings, Hilton, went from making consistent about $1 per share to now losing about 70. So about 200% digression in the earnings per share. Yet, look at the chart. So it's losing money, yet the stock is worth the same or almost more, because we're back to the pre-COVID levels right here. And HLT, if we take a look at the 2019, exactly last 12 months ago, before COVID, we said the stock was stopping and it was about 110 bucks. That is exactly what the stock is today on December 31st, 2020. It's at 110 bucks. As if nothing ever happened. As if the company is not losing money now. As if its revenues did not suffer. As if nothing ever happened. HLT, touched, guys, this is, look, January last year was at 107, so now it's at 133. Lows in March were 45. Guys, I mean, we're up almost 3x since the lows, back to the pre-COVID-19 levels. This stuff just doesn't make any sense. If you take a look at Marriott, it's the same thing. The company consistently made profit, $1.50 a share. Goes back sharply to losing about 68 cents a share. And, look at the chart. As if nothing ever happened, guys. Back to almost pre-COVID levels. I mean, this is insane. So if we take a look, December last year was at, in 2019 December, it was at about $150. January 2020 was in the 130s pretty much the entire month. And this is where we at now after hitting the lows of 47 in March of 2020, guys. We're back to the 130s. So that's another one, 4x appreciation since the lows, while the fundamentals are deteriorating on consistent basis. So we'll take a look. To put it in simple terms, maybe some of you guys are new to watching the channel, but to put it in terms that everybody can understand, I think pretty much everybody owned a house or can understand this analogy here. Think of this way. If you were looking at a house that was $500,000 last year, and for whatever reason you decided not to buy it, now you're back in the market looking for a house again, and you still like that house, but you now find out that the house has been flooded a couple of times. It's got fire ants, it's got mold, it's got all sort of fundamental issues. So in other words, the foundation of this house has deteriorated within a year like you wouldn't even imagine in your wildest dreams. And yet, the market price of such house is now more or the same when you were looking to buy it last year. So if you were looking on an individual basis to buy such a house, what would you do? Well, clearly you wouldn't buy a house that's got fundamental issues to begin with. Definitely you wouldn't buy one of the cruise lines that are possibly on the verge of filing a bankruptcy in the last 12 months. You wouldn't want to buy a house that's going to entirely fall apart on you. And if you did want, you wouldn't want to buy such a house at a phenomenally low price, not at a higher price or the same price before all these issues with the foundation has surfaced. So it's clearly that the market is blinded by a lot of things that are developing in the markets right now, by a lot of cheap money, by having the lack of alternative to invest the money elsewhere. But at these prices, the bullish momentum, could run maybe just slightly higher, but it's going to present a phenomenal opportunity to short again because the expectations are so high, while these earnings per share and revenue numbers make absolutely no sense. Wall Street and analysts expecting a V-shaped trajectory in the earnings, which may never happen for another few years. So what would you want to do with an opportunity like this? You want to short it. You want to take advantage of this. But the level at which you short this makes a huge difference. The level at which you pick your strike price makes a huge difference on the outcome of your trade. So if you somewhat understand the general information presented in this video, but you're not sure how to put on the actual trade specifically, if you're not sure which stock is more beneficial for you to trade based on the size of your account, guys, I have a simple solution for you. Just get on a phone call, 20-minute absolutely free phone call with a senior trader. Go to 13marketmoves.com or simply click the link below in the description of this video and get your questions answered so you can position yourself for a huge profitable 2021. Guys, with that said, take action now. Click the link below, and I will see you soon on the next video. Don't forget, if you're new here, subscribe, because in the next video, I'm going to show you the three key components that separate the traders that make a ton of money and that make just a few $100 a day day traded, you want to know these 3 key factors that can help you change your trading game and elevate it to an entirely new level in the new year. So subscribe, click the link below, guys. I'll see you on a bunch of awesome trades in the next year. Let's roll.